Hi traders, happy new month. You're welcome to the month of November. I hope this month is going to be very profitable for us all. Welcome back to the Forex Gate channel. In this video, we are going to be looking at a concept, a popular concept called Confluence, right? Confluence zone. We're going to be focusing on Confluence zone in this video. So if you are looking to level up your Forex trading game and want to get more precise with your entry and exit points, then this video is for you, okay? The confluence zone is a strategy that pro traders use to improve their accuracy, and I'll be breaking it down step by step so you can start implementing it right away, okay? You can start implementing it right away. So what exactly is a confluence zone? In simple terms, a confluence zone is an area on the chart where multiple indicators or technical factors align. Now, when different tools all point to the same price level, it creates a stronger signal for potential reversals or trend continuations, right? This means that a confluence zone is not just any support or resistance area, it's one that carries extra weight because several indicators agree on it. Why is this important? Well, these zones give you clearer insights into where price might react strongly, helping you focus on high probability setups rather than scattered trades. Okay, so confluence zones act as magnets where price is likely to experience either strong support or resistance, giving you valuable insights for making calculated trading decisions. All right, so let's talk about what creates a confluence zone. Let's talk about that. You'll typically find these zones when various technical elements align in a particular area. So let's look at a few key components that you can use to identify confluence zone. Okay, please note that you can use a variety of indicators. Confluence is not limited to a particular set of tools or a particular set of indicators. In this video, we're just going to be looking at a few, right? A few indicators, but it doesn't mean that those are the only tools or the only indicators that give you a confluence zone. Basically, any indicator at all, so long as you have more than one indicator giving you the same signal, you have a confluence, okay? But for the purpose of this video, we are going to be using the Fibonacci retracement tool. Okay. We're also going to be using moving averages, right? We're going to be using moving averages. And we're also going to be using trend lines and support resistance levels. Okay. So basically, that's what we are going to be using in this particular video. All right. Now, as for the Fibonacci retracements are great for identifying potential support or resistance levels. When a Fibonacci level aligns with other indicators, it adds strength to that zone. Okay, so Fibonacci, they give us possible reversal points. Okay, how you draw your Fibonacci? Let's say Fibonacci are usually used in a trending market. All right, in the trending market. So we have a bullish trend here. What you have to do is you stretch the Fibonacci from the first point, which is a low, to the next high point. All right. So when you stretch it from point A to point B, then the Fibonacci retracement tool brings out possible reversal points. Okay, possible points where the pullback will get to. We have the 23.6%, 38.2%, 50%, 61.8%, 78.6%. Now, any of these levels can serve as the point of reversal for the pullback. Okay, when the pullback gets to either of these points, then it begins to reverse. If for any reason the pullback gets to the 100%, then it's possible that that trend has come to an end. Yes, it's possible that a complete trend reversal is about to happen. Okay, so in this case, we can see that the price of the asset got between 78.6 and 100%. It shows that there was actually strong sell momentum, and there's even a possibility that this trend is coming to an end, because after getting to this point, we can see that it got back to retest the high. So we have a double top formation here, and this double top formation is a chart pattern that can indicate reversal. So, well, we are not sure exactly where this price is heading to next, because it could actually reverse, or it could break out of this resistance, because we can see that a resistance has actually formed here, right? So it could either continue downwards, sorry, it could either reverse downwards, or it could break above this resistance and continue the bullish trend, right? And it seems like an ascending triangle chart pattern is even forming. You can see this is an ascending trend line, and you can see that this is a horizontal resistance. So an ascending triangle chart pattern is even forming at the same time, right? But that's by the way. We are talking about Confluence in this particular video. So basically, what we should be looking out for when we want to enter a trade, we should be looking out for our Fibonacci retracement, our moving average, and our trend line to give us the same signal. Basically, that is what we are looking for. Okay. So now, in the case of this is a bullish trend, so we are going to look for a buy opportunity, right? So now, because we have a trend line here, basically the buy signal from a trend line is when price touches the trend line and bounces back upward. That is the signal for the trend line, right? Then the signal for the moving average is when the price cuts above the moving average. Okay, that's the signal for the buy signal for the moving average. And then for the Fibonacci retracement, basically is when price bounces off one of the retracement levels. So now we initially had the price of Euro USD bounce off the trend line. The trend line was the one that gave us the first buy signal. Now, after the price bounced off the trend line, the price also bounced off the Fibonacci retracement level at 78.6%, although it's dropped below 78.6, but it couldn't reach 100. So let's just say it bounced off the 78.6%, right? So we had our buy signal from the Fibonacci. Then the moving average finally gave us a buy signal at this point when the price cut above it. So we can say that we had a confluence zone around this point. We can say we had our confluence zone somewhere around this point, because we had the price bounce off the trend line first, and then we had the Fibonacci retracement giving us a buy signal, as well as price bounced off it, and then finally we had the moving average give us a buy signal as price climbed above it. So we had a confluence zone around here. So if we wanted to enter a buy based on buy signal from these three indicators, then it would have been at this point that we would enter our buy. Okay, so I hope this concept of confluence is easy for you to understand based on this explanation. Basically, confluence just means that you have more than one indicator telling you to do one thing. It's either the indicators are giving you a buy signal, or the indicators are giving you a sell signal, but they have to be telling you the same thing. Okay, all of them have to be telling you to buy, or all of them have to be telling you to sell. One of these must happen before you can say you have a confluence. Okay. All right. Now, now let's get into how to actually how to use confluence zones with any other strategy, because confluence zone is a concept on its own. It's not exactly a strategy, right? It's a concept. So you can make use of confluence irrespective of the strategy you are using. So someone who does not use Fibonacci retracement in his strategy shouldn't think that he can't use confluence zones. So let us try using confluence zone in another strategy. Okay, so I'm just going to be removing the Fibonacci tool. I'm going to be using the Fibonacci tool. Let's assume that you are a person that inculcates momentum indicators into your strategy. So I'm just going to be using, for example, the stochastics. I'm just going to add the stochastic. We are still talking about confluence, right? So I'm just going to add the stochastics to the chart. and then we are going to use the combination of the stochastics, the moving average, and trend line to identify confluence. Okay, so now remember the pattern remains the same. You have to get a signal from all the indicators you are using. You can decide to use only 2 indicators. You can decide to use 3, 4, 5. It's your choice, right? So we had a buy signal from the trend line. You can see price bounced off the trend line, and then at the same time the stochastic oscillator was in the oversold and pointing upward. We had the main line cross above the signal line, so that was a buy signal, right? So we can see that the trend line gave us a buy signal, the stochastic oscillator gave us a buy signal, and then here the moving average also gave us a buy signal. So we can see that we have a confluence zone as well. Okay, so you can see that you can apply confluence irrespective of the strategy you are using. Even if you want to use another indicator, you can mix up indicators for your confluence, right? Depending on the indicators you are more comfortable with. Okay, so yeah, that's basically it. Confluence zones are incredibly valuable because they allow you to filter out weak trades. Okay, instead of taking trades based on just one indicator, you are using a combination of factors that work together to give a stronger signal. Now, this means fewer false signals and more focused trades. Plus, trading around these zones gives you a clear entry and exit plan. If the price is approaching a confluence zone, you know that it's an area to watch closely. And once you are in a trade, that zone can guide your stop loss or profit targets, right? Allowing for better risk management. Okay, so basically, confluence zones are a game changer in Forex trading, giving you more confidence in your trades by combining multiple signals. If you found this video helpful and want more tips on mastering Forex strategies, don't forget to smash that like button and subscribe to the channel. And drop a comment below if you have any questions about finding or using confluence zones. Thanks for watching, and I'll see you in the next video.